Okay, we're live. What's up, everybody? Spencer Israel, Kenny Glick here on Stock Market TV. It is 3:34 on Wednesday. We are approaching the climax of this earnings season here. We're going to be getting in a very short while Meta, Microsoft, and Alphabet reporting tonight. And then tomorrow we'll get Apple. We'll get Amazon. Those are the big ones, right? Coinbase is tomorrow. We got a lot of names coming up, and it's earnings season, which means it's Kenny's season here on the channel. Last week, if you're watching this very stream, you saw Kenny call the move in Tesla before it even happened. It was quite remarkable. So let's see what tricks he has up his sleeve today. Kenny, how has the day been treating you?
I don't know yet. It's not over.
Oh, great answer.
Yes.
Well, we had some action around the Federal Reserve meeting and announcement and press conference today.
Did you hear what happened? I heard he just dropped his pants and he's just like,
I heard that too.
All kinds of crazy stuff, and then he just quit right there.
Yeah, he mooned the crowd and then walked away. I did. That's right.
Cars on fire and something outside, and then the market actually rallied off that.
But
I'm still waiting for the Qs to make their mind up. But I'll tell you something. There is an anomaly going on right now. UVXY is green at 3:35 in the afternoon after a Fed meeting. Usually the volatility products immediately collapse once the Fed does what they need to do and the fear goes away. But there's a little element of fear in the air right now. And kind of just, again, I'm not shorting the Qs because it's against my religion at this point now. But there's a reason to be shorting some other stuff. But before we get into that, speaking of earnings, that Rambus trade, right?
Yeah.
So I want to talk a lot about it. But right now, if you are short the Qs, I'm rooting for you immensely. And let me just point out what's going on. You're seeing something that doesn't normally happen, and that is UVXY staying green. This is a volatility product. It's more than the VIX. It's basically the fear index. And every time an event happens, whether it be an economic data at 8:30 or 10 o'clock or a beige book, if that still exists, or whatever it is, or a Fed meeting, usually Fed meeting's over, UVXY collapses, market goes up. When you don't see that happen, you got to take it under advisement. And right now, the Qs are the king, right? So the Dow and the SPYs have already gone red. It's doing what you normally would see, but the Qs are so immensely strong because you're about to unleash Meta, Microsoft, and Google, and everybody knows they're going to be monster blowout reports. So you're fighting a lost cause when you're shorting the Qs. That's what I've been trying to say. But if you're not shorting the Qs and you're just watching the SPYs are doing what you would think they would be doing, having a struggle with UVXY because UVX more or less tied to the SPYs first and the Qs second. But, while we're sitting here watching this chop, let me show you this Rambus trade, and let me explain to you what we do for a living. The earnings are important to us, friends, because we want to trade the after reaction. Rambus, I was so super bullish on it that I put aside all the dumbness, and that's exactly how I described. The dumbest trade you could do is buying an option going into the report. First of all, you're guessing on the direction of the stock. You never know how it's going to react to the earnings, and you're overpaying, which is the worst part about it. You're paying usually a 20 or 30 cent premium on the option going into the report. So it's a lose, lose, lose.
So even if you're right, you're probably still wrong.
Correct.
Because the option is so expensive.
Correct.
You have to be so unbelievably right to actually make money.
Precisely.
Right.
And, and the joke was I did it anyway because I had fear of missing out. It was so close to all-time highs. I didn't want to have it do the gap and go without me. So I bought one contract. I did a 115 for $8, and I sold some 155s for $1. So basically I had a 1-2, call spread, laid out 6, took into most I could lose was 6 points, which no matter how many shares, whatever contract, I did one contract. And then obviously, if you guys saw what happened to Rambus, it was as if they said, oh, Kenny went and bought options into an earnings report. Let's remind him not to do that. And look at what the stock did. I mean, it not just plummeted, it gave us a little false, sense of relief there, and just got annihilated. Absolutely annihilated. I mean, it doesn't matter. It could have went to zero. We only had options. But then we come in the next day and we say, oh, good. The stock that we like is gapped down on the report. We're still in a bull market. Let's go back to the trade that never fails. And oh my God, did it never fail. So here's the Rambus. So the first move was early in the morning. Some of us were awake here buying the first VWAP break.
This is yesterday.
This is yesterday.
This
so
is
the first
yesterday.
VWAP break.
I just want to clarify that.
Yeah, it kind of really happened at 4 o'clock in the morning.
Right.
And then you had, where we were reasonably, we were sort of awake. That's the fake out, shakeout. There's a VWAP break. And the test from on top, that solidifies your bullishness. So there's where you buy it. So we were already long the stock and making some money. But what I don't want to do is take any excessive risk. So before the open, I'm usually exiting my pre-market trades because you just don't know what's going to happen at the open. You usually get a huge influx of volume, and then it could just candle you out or just crush you. So we waited, and we got flat. And then the stock did us a favor by pulling back first, flirting with the VWAP, and there's that little mini faux show, bro. And we bought the stock right back on the way back up. I wound up getting in a little bit late, but some guys got right back in at 98.50, 99.50. And then here's the magic. So when you join our room, and when you hear me talking about how the market's rigged, it's rigged to very specific prices, and that's VWAP. As VWAP has spread, more and more traders are using it. Quant firms are using it. Obviously high frequency trading, they're using it. It's the algorithmic language of love of institutional ownership of the market, and that's who moves the market. So if you have where they're normally buying and where they normally sell already pre-programmed on the screen, all you're doing is buying the blue line, and that was at 96, and it goes right to the orange line, which was 107.55. This line was there before it went there. I mean, obviously, if you were in our room, you would have seen it. So what we do is we just trade that. So instead of buying an option beforehand, you came in the next day and you're buying that same option. If you wanted to buy the 115s, they were down to like $2. They were $8. But really, the reasonable play was buying those hundreds for about 5 or 6, and they went to about $15, which realistically wasn't a great trade. 300%. Not that it sounds amazing, but for a 20-point move, making only 15, 300%, it's not that great because the options were still kind of overpriced and illiquid. But fast forward to what we did today, I'll show you. And again, everybody must know about this FI. I mean, absolutely just getting lit up, and not one attempt to try to break VWAP. You just don't see this, friends. That is some nasty, nasty selling. But then what do? We wait for the faux show, bro, right? So when a stock breaks the new low, then it comes back. Aha! Now we could finally buy the stock with risk reward in our favor, because the first thing that the VWAPians try to do, VWAPians is what we call ourselves, is we look for the reversion or go back to the VWAP, because the VWAP is now when you're below it, stocks want to revert back to it or act as almost like a magnet. So our faux show bro is an indication to buy. So we started buying it here right at 68 and change. And now we're only risking, the low of the day as our stock. And look, we got a beautiful trade right to the VWAP. And we sold some there. But when you get over the VWAP, that's confirming your bullishness. And we almost had a perfect trade on this one. Let me show you. It got there and we missed it. I'm sorry, friends. But, $77 stock, we missed it by, I think it got to 76.70. Our target was 77.20. Shucks. But look where our entry was. We were buying here, selling some here, selling some here. And then, we didn't sell any here because there we were looking for it to get there. But we wound up just, when it rolled over, we just sold the rest. Wonderful trade.
Okay, so Fiserv today is down 43%. Find me another person out there who's not a market maker, who made money on the long side of Fiserv today.
Right. And let me show you the other one that, again, when I tell you VWAP not just saved my career as a shorter because stocks don't like to stay down, it literally saved my life. because I used to be in a very aggressive shorter, and again, without VWAP telling me that I'm wrong, I would be getting my ass kicked probably in 2025, even more so. But so here's LRN, another disaster, right? So same premise. I don't even know what this stock is. Never heard of it before in my life, but I love me a disaster. So when this stock came out, I was like, okay, let's wait for the faux show. And you see how we got it right here? So you broke a new low, then you came back, and then you reverted to the VWAP, and then it pulls back and then breaks the VWAP. So we bought it. And in this price right here, so at 84.75, again, if you don't have to be a hero on these trades. Let's just round off the numbers for easy math. You're buying 85, stock went to 87. You got 200 shares. 200 measly shares, you made 2 points. It's $400. That took you about 9 minutes. This is a job. Most Americans aren't making $400 a day, and they're sitting at their office the whole day, and they got to get on they have bosses and whatnot. But the important part of this trade was right here. We're thinking, all right, let's go. Let's go to that orange line and get paid. And then it did something different. It rolled over, and then it broke VWAP. And in that moment, you got to say to yourself, all right, we're wrong. So the idea is, okay, it's okay to be wrong. You just don't stay wrong. And see that big candle and that volume? That was us dumping it. Sold some for a profit, sold some for a small loss, netted a profit. That's the end of the, again, that's all we care about is netting a profit. But then look what happened to the stock afterwards. It absolutely got annihilated. And that little blue line saved us because it tells you this one's over. Time to get out. And then we got out. And if you're not prepared to eat the trade or just accept that the market knows more than you, Jesse Livermore, said it best. The market knows more than you. VWAP is the market with a bullhorn. Hey, I'm telling you something. And if you ignore it, you're going to lose. And that's kind of where we're at. And right now, this market, you're not missing anything. So this Fed result and this Fed chop, that's all we've been getting. This is just aggressive chop, still bullish. Chances are we're ripping higher after all these numbers come out. But, I was hoping to see the rest of the market come in like the Dow and the SPYs, but the Qs are just the champ.
Kenny, you said something that I think is pretty fundamental to all of this, which is the word magnet, right? VWAP acts as a magnet, right?
Right.
That's just the nature of what it is, right? It is the volume weighted average price. So
right.
it's that's what it's going to do. It's going to the price will naturally gravitate towards the average, right?
Yes.
That's just what happens.
Right. And then what you're witnessing there at that prior day VWAP, or what we call multiple time frame, it'll gravitate there and then make a new decision. Or quite often that 1 minute, you'll hover at the 1 minute for quite some time, making a new decision here. That I think there was one, ENPH was one from today. So it really didn't want to tell us anything as it just hovered there. But once the hovering is over and it breaks new lows, you got to get out. But again, with every trade, this is what I love about this setup. It replicates and it happens again and again and again sometimes. So ENPH, again, terrible solar stock. I hope nobody's still long this one from, 300s or 400s. But we come in, we're looking for some earnings plays, right? Fake them out, shake them out, VWAP breaks. But just like the LNR, you got some high expectations for this thing to rip, but then it rolls. You don't not sell it. I know I used a double negative there, but you must sell it. Now check this out. So let's say you went back and you were stalking the stock, which is what we call it when we just go back and check. What do you see here? You got yourself a faux and a show, and then it tests that level from on top. And this little trade right here, $32 gets you $32.50. I know it doesn't sound like a lot, but even a half-point trade where you have risk reward in your favor and pretty much an 80 to 90% chance of success, you see that on a Friday, that's how you get a 5 or 10 bagger. So let me elaborate. If you got a stock that's basically sitting around late in the afternoon on a Friday, the option trades are half numbers and whole numbers, most of the strike prices. So a stock like Ford and Clove and Open and Intel last week, these were 2 or 3 cent options, but all you needed was that 50-cent move from strike price to strike price. So if you have an advantage here where you're getting 32 and the high was 32.50, Just imagine this is Thursday. Oh, sorry, like a Friday. Close to 2 o'clock. Those $32 calls are going to cost you a nickel.
Yeah.
Stock pops 50 cents. That's a 10 bagger. So you buy yourself, 30 calls for $150. Next thing you know, you got yourself 1,500. And it's these little subtle plays that I love, and that's what we do. That's what we do. We just look for these and just go back and crunch the charts, always around the same stocks. And again, why are we trading earnings reports? More volume, more better. They just seem to work better when there's more volatility, and when the most volatile, and you got is earnings. So
I want to look at a couple of these reports that we're about to get. Before we do, though, there's a good question in the chat from John. I don't know if I've ever asked you this before, Kenny. Why do you trade the Qs so much as opposed to like the SPY?
I was born on the Qs. I was there for the inception. I was there for the IPO.
Okay. If you were 10 years older, it would be SPY.
I might have been a SPY guy. Yeah, but I'm more of a Q guy because I basically was born into it. I was there when it was 4 Qs. So it was one of the first stocks, that I started trading because it made sense to me because I was a tech guy also. By the way, obviously we're resolving ourselves to the upside. The Qs don't go down. But also, again, my dad's in it. So that's why I became addicted to shorting. I felt like I was hedging my father. He doesn't need hedging. He's doing fine. If I told you the SoFi story, let me tell you the SoFi story. If I didn't tell it to you while we got you. So yeah, my dad's a big shareholder in SoFi from 12 and $15, loving it. But yesterday it did what you don't want to see. Gapped up on earnings, right? And it broke VWAP. So that's an earnings reversal. That's my favorite trade. So I'm shorting the hell out of this thing. And then I get my father on the phone. I'm like, Dad, well, first of all, he didn't know they reported because he's a true investor. He doesn't care about these things.
Dad, where to be?
Dad, I was like, Sophie's has an earnings reversal. You might want to sell it. Who is this? Why are you calling? Are you saying something about selling? And he hangs up. And the funny thing is I saw him later that night and we made money because that was a 1-minute multi-day VWAP reversal trade on Sophie. We killed it. But inevitably, look what it became. It became a fake out, shake out, VWAP breakout. So according to my father, he's like, what the hell are you talking about? The stock was up.
That it's not even on his chart.
Right. He doesn't look at charts. He just looks at the end. He goes to the New York Times, looks at the stock. He's back. He's old school.
Oh, WSJ, the high and low of the day on the back page. Right. That's what he's, yeah.
Right. So it's like, I'm telling my dad, I'm like, no, Dad, seriously, we actually made money shorting the stock. He's like, sure you did. I'm like, no, really, but it's okay. And that's the beauty of this market right now. And again, it's so super bullish that as a shorter, you should expect to not only cover, but go long. And, that was kind of Caterpillar. I was sitting here all day waiting for a short. You finally got a reason to short it. And 2 seconds later, it's over. So it's just such a difficult market to be a shorter in. And that's why even the disaster stocks, you should be looking for, once they make their turns. And again, this stock is terrible, FI, because for it to only come off 3 points after the stock's down at 12-year lows and nobody wants it. It is a disaster. And it's just, VWAP told us, hey, look, no matter how bullish you might have been over here, it's over, Johnny. And it was time to get out. By the way, Q's now up 270, friends. You're just not going to be able to make money as a shorter on the Qs. You could short stocks, but man, you cannot be a shorter in the Qs. Incredible action. By the way, you see what it did? We got the anomaly print. Remember I was talking about this morning? We got it, and it went right to it. And we got to the prior day VWAP, and then we went, this is the 2-day VWAP. So when things are selling off in the rare moments, all you do is grab more data, and you see, all right, cool. We went through today's multi-day, and then we looked at 2 days and like, oh, it's not a big deal. We're right back above it. Next thing you know, here comes the rally. And it's always, and by the way, the red lines are mine, red lines. These are where I place trades and where I put stops on. My charts are very, very clean. All you're seeing is blue and orange lines. And that's all you ever need. And again, we'll talk more about how to draw the red lines on November 22nd. If you guys are
that's right.
If you're thinking about joining the room, this is where you get a free bonus from me.
The Saturday class,
yes.
a month from now. Let's talk about some of these stocks that are going to report here in a few minutes. Let's start with Alphabet, which has just been going to the moon,
Yeah.
all-time highs, and I don't know what there was to say about it other than that. Honestly, it looks amazing, and that's a 1 minute chart. But if you go to a daily, I mean, look at that thing; it's a freaking monster.
And again, it was going through that trouble where people were getting super bearish on. I forgot what the reasoning was, but you cannot be super bearish any of these top QQQ stocks. The money keeps pouring in, and again, as a bear, the way I look at it is that April we crashed and we began a new bull market. The bull markets only last 3 months, 4 months, 5 months. No, they last 3 to 5 years. So if you really want to, think about it, we just started a new bull market in April. We're good for 3.5 years. Plus, we just started a new industrial revolution, as far as I'm concerned. This AI thing's not going anywhere. Quantum space rockets, robots. It's a great time to be an investor. But I still rather be trading. Again, I like being visceral and getting paid rather quickly. But when I see a stock rallying into the number, it's susceptible for selling. But that's my bear talking. None of that stuff works anymore. Usually when I see a chart of something that ran every moment into the report, I'm usually looking to sell this thing, but not in this market, friends. I got to wait till, if the gap fails, for sure, I'll be looking at it. But I think they're all basically the same chart. We're all flirting with all-time highs, Meta, Google.
No, they're not really all the same chart. I mean, look at Amazon. Look at
well, I mean, roughly, we're all. I mean, we've had this monstrous rally, yeah,
more or less.
Yeah, something like Starbucks. Let's see, Starbucks.
That's a totally different situation. Yeah,
right there you go. So again, this is reporting earnings tonight. Very curious of what they have to say. Again, red lines are just where we've done some trades. I usually leave them up. Probably these were the last 3 quarters. I only trade Starbucks on earnings day. So this was probably the last 3 quarters of where the stock was, and we're kind of in limbo. That orange line is a yearly VWAP. And you'll start to notice I only use VWAP on every time frame. So daily, basically minute to minute, and then I'll grab data from the day before, the week before, the month before, and I'll just, get a really great snapshot of what the stock's going to do. And what I like doing also is just look at the 3-month VWAP, which basically grabs everything from the last earnings report. And you're seeing it. There's your 3-month VWAP. So right now, institutions are telling you that they're not so excited about owning this Starbucks since that last quarter. But if it breaks back over here, you're going to be coming out of that, let's say, that 3-month downtrend. It's an interesting little setup if it can get back above that 87. And again, all that stuff will come out as soon as the earnings reports start hitting. And then, I generally stay after market. And if you guys are around tomorrow night, we stay till midnight, and we have a big party. If you're interested, we do called the Schmooze. If anybody doesn't know about this yet, you can email me for a special invitation. My email address is kennyglick@aol.com. If you guys haven't been invited yet, basically we play some music. We crunch some charts of the stocks that report earnings, and we prepare for those daily options where, usually Friday, instead of doing 200-300%, you're looking at the 5 and 10 and 20 baggers, because like I explained, you don't need that big of a move on a Friday to get paid on some options. So we prepare for everything Thursday night, have a couple of cocktails, dance it out, and then come back in the morning and get to work.
All right, so I want to stay just for a few minutes, maybe till like 4 or 5 or so, just while the first couple reports drop. We'll get Google or Alphabet. We'll get that right off the close.
I'll show you how I plot. So again, it's basically a knee-jerk reaction. You know how the market reacts. You get that first burst of energy, and that usually is not the smartest move to get involved in, because there's usually a counter trend move. And then you have the conference call. So we're kind of waiting to see all the reactions to what they say. And then the analysts make their comments. And then by 8 o'clock, you get a good feel of what the stock wants to do. And then tomorrow morning, we come back, crunch that chart, and get prepared to put some trades on. So it's going to be real active the next 48 hours.
I'm trying to find the stat right now. It was from one of those sell side shops. I think JC had dropped it a few days ago. How many? There it is. 43% of the S&P 500 report earnings this week. And within this week, today and tomorrow are going to be the busiest. So you mentioned Starbucks. I mentioned Meta and Alphabet and Microsoft. We have Chipotle. We have Carvana tonight. ServiceNow tonight. Tomorrow morning, Eli Lilly. Comcast for those who care. Roblox for those who care. Merck. I don't know if we care about Merck. Maybe we care about Merck. I don't know. And
yeah,
then
this is the time to care.
Yeah,
like stocks that you don't normally care about, like who trades KDP? We did. That they reported earnings, so we traded it that day, and it was decent. PayPal I haven't looked at since we reported. But the thing is, when you got Meta, Microsoft, Google, Carvana, Starbucks all reporting on the same day, that's basically the Qs. So you could go right to the Qs, you could trade the number, or a combination of both, because whatever those, there might be a cancellation kind of thing. If Meta does well, Microsoft doesn't, or Google does well and Carvana doesn't, kind of one will cancel out each other. But it makes it so exciting.
By the way, Kenny, speaking of PayPal, it had a huge gap up on earnings yesterday, and if you shorted it after it broke VWAP on the downside, it hasn't stopped going down since then. It's been 2 full days of downward selling.
Right.
So,
yeah. It was actually a little bit surprising that it gave the whole thing back. But that stock it's a dog. It really is. I thought I had high hopes for it too.
Yeah.
If it would have stabilized. But
we
already made back the whole move. It's unbelievable.
For today?
Yeah, the Qs are right back. We're 30 cents off those highs.
Qs end up closing green about 0.5% on the day. So
yeah, we're just not allowed to go down. It's really, it is something to behold. And I've seen every market. I've never seen this before. I've never seen a market that legitimately seems like it's illegal for it to go down. And every move we have to the downside is met with an equal move and greater, almost 3x. It's incredible. It really is. I'm kind of stupefied every day by it, but I'll tell you one thing, don't get in the way, because we could easily tack on, 10 more % on this market easy. And that's 60 more points on the Qs, which is really not the big deal of it anymore. All right. So it looks like we got Goog might be out. Let me see.
Is it?
Big candle usually implies that something might actually that's not that big. It's only
I was gonna say I don't see.
It's just chopping.
I don't really see anything. Typically earnings reports, if you really want to get down to the nitty gritty, in the after hours session, they come out in 5-minute bands. So 4 o'clock, 4:05, 4:10, 4:15, 4:20. Pretty much by 4:30, they're all out. I think Apple will usually go out at like 4:30. I want to say, and then that's more or less it. And then by 4:30, 4:35, that's it. But they come in chunks, like I said. So I'm waiting to see. Yeah, I think Alphabet actually is out. Hold on, let me get my new. As if we care about the news, right, Kenny? But let me get the news.
It's out now, and it's ripping. So. It's got to be out now. That's a 10-point move.
Yeah. Yep.
Here, let me just point out when I say the market's rigged. So here you got Google, 7th most popular stock on the face of the planet, just reported earnings in the most volatile, illiquid moment of its life. And it hits an exact whole number to its spikes to. An exact whole number. That wouldn't happen if this is human beings, right? These are programmed in. So there it is. So 285. So you already know above 285, you better not be short, and you probably want to be still long. Tomorrow morning, again, I'm just basing this on this first candle. And again, 285, and you're already sold off. You gave back most of the move. So now once you're inside that candle, you come outside the candle, you're a buyer of 285. You come below the reaction candle, you're going to go lower. But chances are, because we never go down, you'll break 285 and
can we zoom out, please? Can we maybe see if there's something that we can learn from today's action? Any levels we can glean?
Well, I think this is all-time highs, you said, right?
Shit, you're right. I did say that. Never mind.
Never mind. Next target, 300.
Whoops. All right. Moving right along. Yeah. Okay. is check
Well,
on
here, what I just showed you is exactly how you start setting up trades. So
Yeah.
the reaction highs and lows, you plot your attack, and you're still inside this candle. You kind of came out, now you're back in.
Okay, much better example here. Microsoft.
Okay.
Yeah.
Microsoft
Which is
must
also
be red.
Yeah.
All right, Microsoft's red, so big influence to the down. Now you got the. So now here's what you see. What you're seeing right now is exactly what I said. The Microsoft is canceling out the Google for now, and that's kind of why the Qs are kind of like stagnant, right? And by the way, you see how the Google trade happened? That would have been us buying 285 tomorrow and making this 5 points, 200 shares. You got yourself $1,000, and that's without VWAP. That's just knowing price action. So reaction candle high. You sold off 285. You break through the reaction high candle. You're a buyer. 285 gets you 292 now. And this would be awesome. So now look at the reaction candle to the low side on Microsoft. Yeah, just a coincidence, right? Just a coincidence. Microsoft, the second most popular stock on the planet, it goes to 513.50, a algorithmic half number or whole number. Just a coincidence, friends. No, the market's rigged. All this stuff is pre-programmed. So you're just trading around the program. So now under 535.50 tomorrow, you better be a shorter. Well, I want to see the bottom of this candle. The bottom of this candle, 518. So right there, when the foes and the shows start to set up, that's where we want to look to buy. Again, it's usually buying, again. But tomorrow I'll come in and I'll look to maybe possibly short some Google if it's above 292.50. But again, let's watch this Microsoft, right? So again, now you got the reaction low. In this case, we'd be looking for a reason still to buy it, right? But you want to see it break a new low, then come back, and then break over that prior high candle. That's the fake out, shakeout. But tomorrow, the blue line and the orange line will adjust algorithmically to reflect the current environment. The orange line will be adjusted by grabbing more data from tonight, yesterday, and tomorrow morning. And it'll spit out where the algos want to bring the stock, and then we just trade accordingly. And it already seems like it's going to be a lot of fun tomorrow. So got a nice mixed bag. Microsoft's down. Looks like Meta's down. Google up. And
yes, so far Carvana down in the after hours session. Chipotle up a little bit, and Starbucks up a little bit.
Carvana. Now, Carvana, I want to get revenge on as a shorter because I left, 190 points on the table when I had this stock. But I actually have been waiting for a reason to short this thing. But now that it's getting smashed on the earnings, now I don't want to. And that's exactly how you have to trade. So if something already happened that you were planning on doing, I'm already thinking now I got to buy Carvana tomorrow. And that's how you trade. It's not about what you think. It's not about what you perceive. It's about what is happening. So tomorrow, after you're done crunching the charts and figuring out which levels are the most important, VWAP will reform at 4 o'clock in the morning. Multiple time frame will reform. And then you have your roadmap of where your risk and your reward is. And then you start putting on some trades. And we kick the living shit out of everything that we do. And that's what we do. So that's what I'm planning. I'm very excited for tomorrow. And I'm hoping, again, that, this activity we're seeing today, it's going to be all day, all week. We got weeks and weeks of this stuff now.
So listen up. If you're not in the room, tomorrow, hitthebid.com is how to get into the room. When you join Kenny for the quarter or for the year, he will send you his custom VWAP script for Thinkorswim or TradingView, if that is your preference. Every membership comes with a 14-day money-back guarantee. You trade with Kenny for a few days. You think, not for me. I don't like making money. Totally fine. Making money is not for everyone.
We did scare one person away.
Yeah. It's not for everyone. Some people prefer to play with their dog. I don't know.
Right. And let me tell you, for my maybe new friends who want to get into day trading, I've been defending the industry my whole life. I was on 2020, 60 Minutes. I was the poster child of the industry back when I was a kid. And I wish I knew more then and really just defended it in a better way. But they always made it seem like this is the riskiest type of trading. We have no idea what we're doing. We're just degenerate gamblers, which that last part's true. We are. But the idea of it being more risky is completely an irresponsible comment. It's less risky because now you're in control. The market's open, you're at your desk, and you have stops on. That's the definition of less risk. Holding the stocks into reports or overnights, that's when you have no control, more risk. Like watching Rambus open up at $90, you had no chance of getting out of that thing. Whereas the next day you're in full control and you could take advantage of those moves.
Yeah, if you're trading without stops, be them physical or mental, then you're not going to be a trader for very long. Full stop. That will be the end of you. Give it one bad day and you're done. The only reason people like Kenny have survived, as long as he has, is because it's not how much you can make; it's how much you can lose. Right? That's every trade. So. Always have a defined risk. Always have it defined out. Know when you're wrong and when you're right too. That's the power. That's what the VWAP gives Kenny. Right?
It absolutely does. Yeah.
So,
and again, I'm not exaggerating how it really actually just resurrected my career and saved me because again, as a shorter, you'll start to notice stocks don't like to stay down in general, and they certainly don't want to stay down when they're breaking VWAP and prior day VWAP.
Yep.
And that's the essence of the faux show, bro. The trade that we do the most.
All right, join Kenny's room, hitthebid.com, get access to the room, 24-hour chat, the charts, the custom VWAP script. It's all there, hitthebid.com. Kenny, we're going to do this again tomorrow. We'll talk Amazon, Apple, Coinbase, Reddit, Roku. I don't know if you care about that. Riot Blockchain, Strategy. There are others, I'm sure, that many more.
You got it.
So it's earnings season, which means it's Kenny's season. Thank you for watching. Smash the like. And we'll see you tomorrow. All right.
One more reminder: send me a private email. I'll get you a special link for tomorrow. It's going to be a Halloween schmooze, 8 p.m. virtual. You don't have to come to my house or anything, but it's going to be a good event. We'll dance, we'll sing, we'll crunch some charts, and I'll show you how to make 2,000% on some option plays.
Right, the email is up. The email is up on the screen. Is that right?
I don't know. Do I see it?
AOL.com?
Kenny Glick at AOL. I'm old.
I got it.
Make fun of me.